Thank you and welcome to the one-to-one conference. We are very pleased to be presenting Montage Gold Corp. We are a Côte d'Ivoire focused exploration and development company. Speaking today are Hugh Stuart, the CEO, and myself, Adam Spencer, Executive Vice President, Corporate Development. Please note that we will be making a number of forward-looking statements during this presentation, and we direct you to read this disclaimer carefully, which is available on our website. I'll turn it over to Hugh to give you a brief introduction on Montage.
Hi, yeah, Montage is a well-formed, well-backed company. It really has its roots going back into the redback mining days in terms of both the management, but also the projects. These are projects forming part of a sort of 3,700 square kilometer package in Côte d'Ivoire, which date back to 2008. The focus is the Morondo Gold Project. That's our flagship. It was actually originally pegged by myself in 2008 as part of a redback expansion into grassroots exploration in Côte d'Ivoire. And we've really been keeping an eye on it, working on it a couple of times within the last 10 years. But for the first time, it's in its own company, it's standalone. And really, it's the first time that the redback team have sort of gone back to West Africa following the takeover of redback by Kinross in 2010. Currently, Morondo hosts a 1.5 million ounce resource. That's based on only 18,000 meters of drilling, which probably makes it one of the lowest cost discoveries of its size out there. We've been drilling this year since the formation of Montage about a year ago to really demonstrate that resource can expand significantly. And in addition to that sort of potential for making it bigger, it also has a bunch of aspects, a bunch of features which make it an ideal open pit mining opportunity, both in terms of the scale of the mineralization, the true width of it up to 250 meters, with some discrete zones of higher grade within that. Very low strip ratio. We did some metallurgical test work back in 2017, and it shows it's very clean metallurgy, and it's actually quite a soft rock as well. So an ideal open pit opportunity. And also following a very successful IPO on the TSXV in the last month, we are well funded to follow the program we've got with $34 million in the bank.
Just to expand on the team here, so obviously myself and Hugh, on the board we have Rick Clark, who was the CEO of Redback Mining. We have Kevin Ross, who was the Chief Operating Officer of Redback Mining. So they are certainly strong additions to have in the Montage team. Glenn Kondo is our CFO. He's a longtime CFO within Lundin Group sponsored entities. And on the rest of the board, we do have David Field, who was a former fund manager of Carmignac, David DeWitt, who was a founder of Sandstorm Gold Royalties. Peter Mitchell was formerly the CFO of Core Mines. On capital structure, following completion of the IPO, we have 104.8 million shares outstanding, 5.25 million options. As you mentioned, we have working capital of around $34 million today, and our market cap sits at around $100 million Canadian. You can see key ownership figures there. Orchid Gold owns just under 32% of the company. The Lundin family owns about 7%. Sandstorm Gold owns just about 5.5%. And through the IPO, we brought on a number of high quality institutional investors. Institutional ownership in the story is well over 20%.
So as Adam said, the focus is Côte d'Ivoire. I've liked the prospectivity of Côte d'Ivoire for a long time, clearly. As I said, a lot of those projects, especially the permits we've got in the sort of northwest of the country there, go back to the redback days. Really, the geology is good, but also the fact that Côte d'Ivoire is probably one of the least explored countries in West Africa. It's still a place where you can pick up permits that haven't been explored, and obviously that makes it easier to find gold deposits if nobody's looked in those areas previously. Good place to build mines. Yaouré is in construction at the moment. Sisingwe was put into production a couple of years ago. Ity was expanded. And over the last few years, you're starting to see some new discoveries. Obviously, Roxgold at Séguéla, which is about 80 kilometers to the south of us. Abuja with Tietto Minerals, and obviously Endeavour and Centamin with their discoveries elsewhere in the country. So a good place to work. A good place to build mines. There's labs, there's easy access. It's a good place to be. When we look at the project itself, I think the key thing to get away or to take away from Morondo and Kona, which is the name of the deposit, is really the simplicity of the deposit. Obviously 18,000 meters of drilling going into that original resource. Very low cost of discovery, probably sub $5 an ounce Canadian at the moment. You can see from the resource table, it is dominantly a fresh rock resource. So this is not a heap leach, an oxide heap leach. We have tested that in the past, but this is a large, the target here really is a large scale open pit CIL project. A little bit of geology on the left. All the work really since Montage was formed has been in that resource rectangle. Very simple geology, a mineralized diorite package, volcanics on either side of it. And really, it is that simplicity which is the key to sort of the development pathway that we're laying out for Kona at the moment. You can see from the sections, the existing resource there in the blocks, the resource is calculated by the same consultancy that did all the work for Redback. We worked with them for a long time now. The original holes in the thin black lines and the drilling that we've been doing over the last year with the call outs there, really trying to demonstrate that this resource of 1.5 million ounces has significant potential to expand. And we're not really just drilling this resource for the sake of drilling resources. We've done a lot of work in the background. We've pretty much completed a PEA internally. So we really know what we're looking at. So when we're drilling holes like DD4 and on this section DD5, you can see that we've run some scenarios here, and we believe that an open pit can go down, given that the mineralization is up to 250, 260 meters wide in places, can go down to those levels. So what we're looking at here is a large scale open pit, a low strip ratio because it will access grid power, giving us a low process cost, low cutoff grade, obviously lending into that low strip ratio. Easy mining, large scale operation, large scale equipment again, low unit cost. So it has a lot of those features which make it an ideal development project for an open pit mine.
I'll touch briefly here on our location. You can see a satellite image. The orange line running through the property is a road that's being covered in asphalt as we speak. Off the road, you can see several gray areas. Those are population centers. We have no immediate populations within the vicinity of the project. The closest villages and towns are about 5 kilometers away in either direction. Notably, we have year-round access at this property. We can drill year-round through the rainy season. And we also have grid power, as you mentioned, about 20 kilometers to the northeast. So overall, a very good setting for an exploration project and well set up for a development stage project as well.
This slide really just summarizes the sort of what we've been saying in terms of its potential for an open pit. The key thing here is the top line is the metallurgy. It does leach very well in a standard CIL process plant. And the key is simplicity. This is not a deposit where you have to float off a concentrate and grind it to bug dust. This is basic bog standard CIL plant with a low bond index. Critically, it's one of the softest rocks that you'll find, as you can see from the graph there. Really, that's because the alteration here is related to biotite and not to silica. So there's very little silicification. The rock is well foliated, and hence that low bond work index, which is key, obviously, to driving both capital and operating costs down.
Just to take a step back and look at the regional picture, you can see the Morondo permit with the Kona deposit. We sit within a district which is the intersection of the Syama and Tongon trends. You can see there are a number of other companies with permits around us. Our long-term objective here is to demonstrate that the Morondo Gold Project is a robust standalone project. And with that, we believe will be a natural consolidator within the region. Now, to date, there have been no other company that has demonstrated a large-scale standalone project. We believe we are the first, and we believe that gives us numerous advantages when it comes time to consolidate within this region. I'll touch briefly here on the Côte project. This also sits within the portfolio. This is ground that is adjacent to Barrick's Tongon mining lease. We have a nice 8-kilometer strike length soil anomaly that sits within 15 kilometers of that lease. This permit to the south, Côte South, was recently issued. There are no prior records of historical work done on this ground, which I think, to Hugh's point, Côte d'Ivoire remains relatively underexplored, where you can still get ground, obviously in a great location next to an existing producing mine that hasn't had work done on it. So we will allocate a small amount of capital to this property package, but the bulk of our spending will be to advance the Morondo Gold Project.
Just looking at the timeline, that we've set ourselves. The first phase is obviously that resource expansion drilling, which is underway. It started at the beginning of October. We've had 5 rigs on site. At the same time as doing that, that will feed into a revised resource calculation sometime towards the end of January. But at the same time as doing that, we've just shipped about 2.4 tons of material to Lakefield in Canada for metallurgical test work. We're starting the geotech program, the hydrological drilling to evaluate the groundwater, and obviously the rest of the engineering studies, which will flow through into the PEA, which is scheduled for delivery by the end of March, which will then allow us to sort of continue straight towards feasibility studies. With the aim, probably with another 30,000 meters of drilling, there's probably a little bit less. There's a bit of room there to do some other exploration to deliver a feasibility study by the end of 2021.
Just to summarize, I think it should come across that we have a very simple open pit project with a great team, with a strong track record, obviously a very strong balance sheet. With the budgets that we have ahead of us, we're well into 2022 before we would envision raising additional capital. So I do believe that with all the catalysts that we have ahead of ourselves, the regular drill results, 2 planned resource upgrades, economic studies in 2021, we should be able to generate significant attention from the investment community. And we look forward to delivering on these objectives. Just to touch very briefly on valuation based on recent share price, we're trading at $33 per ounce in the ground. That is based on the current resource of just over 1.5 million ounces. We have set the objective to significantly increase that resource in Q1 of 2021. So we do believe that this is a compelling entry point for purchase of Montage Gold shares. And with that, I would like to thank everybody for taking the time to watch the presentation. We look forward to meeting with many of you during the conference in the coming weeks.